Today is 19th of August 2022. It is 7 o'clock in the morning. This is the EURUSD 5-minute chart. Yesterday I took a short position around this area up here. Market had a strong swing to the downside, a pullback above the moving average. First attempt to reverse failed, second attempt to reverse. I entered immediately after this. Strong bear bar closing near the low. That's my entry here. I had a stop loss here. I left it overnight. I came this morning, market was down here. I traced my stop loss to break even. And right now the position is a little bit above 221. So I'm risking $50. This position right now is making 110. I'm hoping for another swing to the downside. So I'm just going to see. Okay, I want to talk about what I'm going through right now, my emotions. So yesterday I had a losing day. Took a long position here, I got screwed up. Took a short position down here, market went back, got screwed up again, got stopped at a break even. Market started going lower. I took a short position exactly down here. Market started pulling back. I got stopped out somewhere here. And then I thought, okay, I'm gonna take a long position. Took a long position because here it was an area of support. Market started pushing higher. I don't know what I was thinking, but I believe I was not thinking anything. So this long position is entirely my fault. Every long position I took here is just entirely my fault. You never know. The thing is that it held here, so I thought it might hold here. But I believe, like, when I gauge the momentum and I see that this is a very tight channel, you could see it's a tight bear channel. Most likely any reversal attempt is going to fail. Right now I can see the momentum has cooled down. Market is mainly in a trading range or moving sideways, grinding down very slowly, but it's mainly sideways movement here. There is no swings like yesterday, but this is very normal between the sessions. You can see US closed here and to London open the second day. It's mainly sideways movement. You can see US closed here, London opened the second day, mainly sideways movement. Same here, same here. So this is very typical between the US close and the London Open for the next day. Yeah, unfortunately I have a full-time job I have to maintain, so I cannot be sitting in front of the chart. Now maybe I'm gonna have to leave somewhere around 11 o'clock, maybe 12 o'clock. Yeah, and usually it's when someone is a beginner, they tend to worry and assume that every pullback could be the end of the current trend. So here I took a long position and I assumed okay, market starts will start to go up. It's just a pullback. It doesn't matter how strong it looks. It's just a pullback in a very strong downtrend. And here I also assumed this looks like a bull flag. Extend it here. It was a bull flag and it had a breakout to the upside. This breakout didn't go any far. Just went all the way up here and started going lower. And then you get double top, bear flag instead. You look at this whole thing. You can see this triangle here. Oh, that's a bear flag. Market took 2 legs down, pull back, third leg down. So right now we have a 1, pull back 2, pull back 3, 3 legs down. It's a bull wedge. Market start to rally at least 2 legs up, 1 pull back 2. Could assume that the market wanted to come back here again and test this area of support as resistance, which it did. So we've got support, couldn't get to it, and then here tested it as resistance and then fell below it. So for now, since this trade here is at break even, I'm gonna consider that it does not exist. And I'm gonna look at the market and I'm gonna see if I can find a good entry short or long for all I know. This area here acted as support 3 times here, acted as resistance 3 times here, resistance here, flipped it into support, fell below it, resistance. Some might expect this to be a double bottom. I would like to take a short position here. This is a short position with a very tight stop. I notice right now that I actually shorted near bottom of this range here. So this in a 1 minute time frame is a very small trading range. You can see support down here, support down here, support down here, support down here, and I shorted down here, which is near an area of support. I assume we had a breakout and we can come back for a retest as resistance before a continuation to the downside. So this will remain to be seen. This 5-minute bar is going to close after 15 seconds. I assume it could have buyers at the close. Yeah, it already started to retrace here, which is not good. Yeah, so my long was in an area of support, very visible here. I think I got stopped out here. Right now the market is near top of the range. Yep, stopped out. I have this trend line here, acted as resistance, resistance, resistance. Let's see how the market is going to treat it. Yeah, generally when I look at it this way right now, just that was a bad trade. That was shorten near bottom of the range. Bottom of the range is support, and again shorten near bottom of a bigger range. So it was a bad trade overall. So I believe all it takes is that you come to the market and you look and you see like this market is looking weak or this market is looking strong. And if it's looking weak, you short. And if it's looking strong, you buy. And if it just moving sideways like this, which is very normal between the US close and the London open, I think you trade it as a trading range, which is if you want to sell, you want to sell high, if you want to long low. But the problem is that by the time you actually look at the market and you say, hey, well, this market looks strong. Well, it looks strong because you see it already moves a lot to the upside, and there's not much profit left in the move. So when you judge it, you don't judge it at the final product. You judge it somewhere around down here, and you see, okay, is this coming down here again to make a lower low, or is it coming up to make a higher high? And most of the people are wanting to catch the bottom or short the top, which I'm guilty of. This is for sure. Even right now, just like I assume that the market is not gonna come back up here again, and this is just gonna go lower. I don't see a reason why this might be true. So a short up here, that was perfect. Near this trend line here, it would make so much sense to short exactly the trend line. Anyway, let's focus on what is going on right now. Yeah, so emotionally, I'm trying still to deal with the results of 2-3 losing trades from the previous 2 days. And I'm trying to disattach it in my mind that whatever is happening today is happening today, and I should not connect it to I had yesterday a bad day, and the day before yesterday I had a bad day, and today I have to make it a good day. I think I shouldn't be connecting it in my mind this way. I just need to be looking at the chart and trading what I see right now in the chart, and the results will take care of itself. So if I'm doing well today, the result gonna be good, and so on. So this here could be a breakout pullback to test top of the range, a support continuation. You can see this in the 1 minute. Assuming that this is top of the range, breakout, pullback, tested already as support, coming back down again. Or it could be a fake breakout, and right now market is gonna put an inside bar and reverse. Taking a short position here is not good. Taking a long position here is also not good, for the reason that we are near a flat moving average. See, when you're near a flat moving average, take a short position here. Not necessarily good. Take a long position here, again, not necessarily good. Flat moving average. And also I believe I'm guilty of not taking profits on my good trades. Somehow I'm waiting for more every time. Market gives me and I'm waiting for more. So right now I'm not taking profits on this position, and I'm actually waiting for much more. And I believe that's a big mistake on my part. I need to take these small 2-to-1 profits or 3-to-1 profits and compound it and keep going. Because not every day gonna be a good day. Or I mean, not every trade gonna be like a huge swing. I'm actually very tempted to take a short position now. Again, near bottom of the range. Last time I shorted here, market bottom of the range acted as support. I got screwed up here immediately. Thinking like maybe I should have shorted above the trading range, assuming that this breakout is going to fail. Maybe there's two options. So you have a trading range. Option number one, you get a breakout, pullback, continuation above top of the range. So this is top of the range. You have a breakout, pullback, continuation. Option number two, you have a breakout, turns out to actually be a fake out, and flush down. What am I thinking right now? I want to think out loud. I'm thinking if I should take a short position here. That's what I'm thinking. And again, I'm thinking, well, I'm going to be doing the same mistake. I'm going to be shorting exactly near bottom of the range. You can see this is bottom of the range here, acting as support, support, and support. And I know I'm trying to look at the big picture that this is likely gonna continue downside. But I'm trading here now. I'm not trading the big picture. If I'm trading here, I need to look at it and see what's going on. And what's going on is actually some sort of widening triangle. Very tight trading range. And likely if I long here, likely market is coming back up here again. So yeah, I'm just trying to have some sort of self-discipline and not do anything. Also, I'm trying to judge the candle after a close. So this candle I entered somewhere down here, and it turned out it had a shitty close and the market rallied. This candle was all the way down here, and right now we're 10 seconds into the candle close, and then it's retracing back up. This bar is trying to be a follow-through bar. Again, we're near bottom of the range. Yeah, there's so much going through my head right now. I'm thinking like, yeah, if this bar went and closed down here, do I want to take a short position down here? I just had the opportunity to take a short position up here and I didn't. Do I want to take a short position down here? And the answer is yes. So even though it's hard and tough mentally that I just had this entry and I did not enter to enter down here on a much worse entry. Well, the answer is yes, because it is what it is. I mean, yeah. Getting ready to enter. Again, I'm short and near bottom of the range, near support here. I believe we got this fake out here. Lots of traders went long, and right now they're trapped. Come on, market, come on. This position I just opened is an 0.6. Interesting. The fear holds me back from acting. So right now I'm thinking you have a fake out above top of the range. Very clear that this bar was shitty bar and couldn't close all the way up here. And I'm thinking, okay, it could be a pullback continuation, or it could be a fake out reversal. And then you see that the exact next bar is an inside bar. Tried to go all the way up and couldn't. But again, it's not the best bear bar to short as well. You could short below it because it's an inside bar after a fake out above top of the range. And this up here could have been a better entry. At least it's more like it's near top of the range than shorting down here near bottom of the range and then market again retracing near bottom of the range and most likely coming up here. Very tough. Yeah, I nailed the exact bottom. I shorted the exact bottom, so I did exactly the opposite of what a good trader should be doing. Tough, mentally tough. This is the 4-hour chart. Trying to clean it. I need all my lines to be just visible on the 5-minute chart. That's it. Yeah, nothing. You look at this chart and what you thinking? I'm thinking that was so obvious that if I want to be doing anything up here, I just want to be taking a short position, nothing else. If you bring someone who've never seen a chart in his life and you show him, you hide this shit, right? You hide it, whatever. And you show him this and you tell him, where do you think this market is going? He'll be like, down. It's going down. And exactly, it was going down. Strong bull bar. It's a very big bull bar. And that's a little bit problematic because it could attract profit takers. You have small bar, you have another small bar, and then you have a third small bar. What I notice in these 3 small bars, each bar of them making lower highs and lower lows. So they are like dojis, but they're trending dojis. And they're showing where the momentum was. So the momentum was to the downside, very obvious, and it just kept pushing down, even though they're not actually covering big areas. Right now I'm having the first inside bar. Market went down, went up, went down, went up, went down. So even here you can see that we have this micro bull wedge. Well, if I come and I look at this area of the chart, I'm thinking, there's so much momentum to the downside, and look at the bars, they started to look shitty. Small, doji, well, most likely we're still gonna go lower. Okay, lower highs and lower lows. Inside bar, strong bull body, closing near the high. Most likely there's gonna be a follow through. But what's very interesting to notice is that before there was follow through, we still went and we made a lower low. So market still made a lower low. And there was this reversal here. The reversal attempt failed. Came back down here to the same area. Another inside bar. Breakout. You see, this is an example of a breakout pullback setup, because we had a breakout that went all the way back down again, so you could assume, hey, this breakout failed. Turned out to be a breakout pullback long entry. We had a massive push up. How far are we from the moving average? Pretty far. But again, I want to avoid doing how far are we thing. If I came here and I've seen here there is a micro double top, I might want to be taking a short position, and I'm gonna be looking, how far are we from the moving average? Pretty far. Then I'm not gonna go short, even though it turned out to be a very good trade if you hold, right? Because if you enter somewhere around this area, there's 5 days of downward momentum. 5 days. So you gotta be able to sit in your hands and do nothing for 5 days. And this is something I really need to work on. Okay, for the second time I nailed the exact bottom. Market went back up again. Makes me feel so fucking stupid. Short and bottom of the range, and when it comes up, I'm already stuck and trapped and underwater. And I'm just waiting to be stopped out. So no matter how strong this candle is looking, you should not enter near bottom of the range. And if you want to enter, you want to wait for a candle close to see how strong this bar looks after a close. Because look right now, it looks like what type of lunatic will go short down here. Oh, that's me, sir. Okay, I got stopped out here again on my second position. I longed exactly near bottom of the range, had stop loss here a second time, and then I got stopped out one more time. Interesting. I think I just want to chill and do nothing. Just a little bit. I shorted near bottom of the range, got tricked. I shorted again near bottom of the range, got tricked again. Just doing a mistake or once. Doing a mistake twice. That's bad. This shit is very, very hard mentally. Because somehow it looks like you know it, but you don't know it. It looks like you know the rules, but you cannot stick to them. Price is approaching this yellow trend line here for the fourth time. So once, twice. Well, the third one is usually the strongest. But let's see. Okay, I'm gonna take a short position here. I have an 0.3, 0.3, 0.3, 0.3 here. So I'm shorting here based on the argument that there is this channel here, and this is acting as resistance, 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 and most likely gonna act as resistance here, but I'm getting beamed. Yeah, I'm getting beamed in here. Forty seconds into the candle close. Let's see. I would say this move looks actually decent move. Looks like three strong bull bars, three good looking bull bars here. 1, 2, 3. And then you have a widening triangle, a trading range, very tight trading range, bar closed. It's a breakout bar above top of the range. This could be a retest, or it could be a failure. I don't know. Anyway, three good looking bull bars. I have a bear bar here. That's a low one, which is okay. If I don't short here and I'm waiting for a low too, you could see we had a bear bar. That's an inside bar that couldn't make a lower low. Another bear bar, I would say barely made a lower low. So bears looked kind of weak around this formation here. And then you had a bull bar rejected below the moving average. And then you had an inside bar. There is the argument that this is a double top near the EMA, but the EMA is flat. It's a flat moving average. So it's usually not a good long and it's not a good short. And then you had a breakout below this double top neckline, failed at the close of the bar. And when it failed, you have a lot of short traders trapped here. and the market pushed all the way up, and then you're gonna have smart traders realize, oh well, this is actually a trading range. I'm gonna be shorting above high of the range, I'm gonna be long in below bottom of the range. And they did this here. They shorted above top of the range and they longed below bottom of the range. I did the opposite twice. I shorted up. I did I long? I didn't long, yeah. I shorted here and then I shorted again here. I shorted twice near bottom of the range. Big mistake. Market made 1, 2, 3 solid, good looking bull bars. Okay. One bear bar. That doesn't look anything special. And then you have a very strong bull breakout bar above this trend line. Somehow going short near bottom of the range here was a mistake. Going short back again in the exact same area near bottom of the range was a bigger mistake. And here I shorted near this trend line here, and so far it's working okay. I had a short position, I scaled in higher, market kept pushing, came very close to my stop loss, and then went back lower again. I'm just gonna be watching what's gonna happen. Here the moving average is acting as support. I want to be patient and see if we can get a good swing near bottom of the range here again, near bottom of the channel. Yeah, somewhere down here. There is going to be the argument from the bulls that this green trend line here is going to work as support somewhere near this area. Support, and they're going to be so eager to get a third touch. It's going to go higher. You'll see. So far, momentum is still favoring the bears. We got here high, low, lower high, lower low, lower high, higher low. So let's see if we can go for a lower low. Okay, I got stopped out here one more time, which is very bad, and I'm gonna go short again. Okay, I just got stopped out here again, and I think I'm done for the day.